All right, I can start. So, hey guys, welcome. This is our official first Friday Trader Pulse uh, event for our podcast, and I'm just going to leave the disclosure up here for a moment. But welcome, glad to have you guys. A lot going on for the week, this kind of second week of April. I guess it is the 14th, right?
Yeah.
And we've got some fun topics to go over with you. In fact, I'll give you a little preview of the topics we're going to go over. So we've got four basic topics we're going to be highlighting today that were really big for the week. One was jobs. We're going to talk a little bit about Bitcoin because I know we've got a large interest in the crypto community, and it seems like what's been going on with Bitcoin inclusively would include a lot of what's happening in the coin market for those of you who are crypto enthusiasts like myself. We've got announcements, so major announcements that happened this week. We'll talk about those. And then we did kind of a fun throw off just because it's a controversial topic that's being hit right now and I'm getting asked about it. But this whole Bud Light thing that happened, and people are asking it, is there a trade there? Is what I'm hearing real? What do you think the impact's going to be? We'll try to stay as bipartisan around it as we can, but the truth's the truth. We're gonna say it the way it is, and if you like it, regardless of your party affiliation, I want you to at least be able to know if you own Bud Light or we're considering making a trade there. At least you've got a clear head going around it, and you know what the truth is versus maybe some speculation or rumors that are going around. Having said that, Todd, why don't you kick us off? Let's take the first topic and run.
Yeah. Well, happy Friday, Matt.
Happy Friday.
Can you see me when I talk? Is it working?
Yeah, it looks great.
Okay. On my side, I can't tell what's going on. There we go. That's a little bit different. So yeah, so to kick it off, I think the thing that caught me this week is the jobs report. You know, we we had huge unemployment coming through COVID, and then it has slowly gotten back to normal. It slowly got back to normal in 2022, and then it's just been kind of going sideways. Right around 230 unemployed, 230,000, just kind of going up and down. And about a year ago, when interest rates started climbing, when the Fed started hiking interest rates, it seemed to it didn't seem to be doing anything with jobs. But this past 4 weeks, we've seen a pretty good uptick. And so we hit 239,000, which is up 6,000 more than expected. The uptrend. So we've got an economist named Eliza Winger said the uptrend reflects job cuts from tech and financial firms, which I found interesting. And she said that most of those are coming from California,
Right.
where a huge tech force is. And so I don't know. What do you think? I think this is the beginning of a lot of job losses.
Yeah, no question. Did you see the Meta report? So Meta's been obviously one of the top tech businesses that's been laying off. But there's this new moral dilemma that's occurring, which is actually fascinating to think about with these tech jobs, because here's what's going on with tech businesses and jobs being obviously under scrutiny, and thousands of job layoffs in tech companies and probably more to come. Meta is having this dilemma where they're losing so many jobs that the people who are left, these executives or their bosses, are all overseas. They're not even in the office that they're in. And so they're having this moral dilemma of like, one, is this ethical? What is this good for the country? Is this good for the US, right? There's this pressure being put on them because their bosses in India, their bosses are out of the country, and in some cases, even countries that we're kind of in political tension with. But what do? They don't want to move here.
Yeah.
but they're the people, they're not the middle management that typically gets fired, but they're so essential to, keeping Meta working. How do you manage that? How do you not avoid layoffs that are imminent, but also keep the structure of your company working in a way that that's functional, and not to mention, uh, you don't get the political scrutiny that would have your stock drop even more, based on, this all executive management is actually overseas and doesn't even exist in the US. I don't
That's
know. I don't
interesting.
know. Yeah, I don't know.
Yeah, well, I mean, here's the deal. There's nothing you can do about it right now. If you're worried about it for a future crisis, then you'd plan ahead by making sure that you balance your staff in the States and overseas. But as a business, you're as a business, you need to watch the bottom line, right?
Right. Well, they
If you're
didn't even see
running a
the risk.
business.
I don't think anyone 5 years ago was thinking about Ukraine. I don't think anyone 5 years ago was thinking that we were going to be dealing with inflation the way that we are now. And so, naturally, you just grow without these risk mitigation oversight. It's not even in your plan of hiring. And not to mention, unemployment has been so low, right? There's just so
Yeah.
many. In fact, let me bring this up. I did find a fun image that I want to share that I think highlights this. Let's see if I can grab this real quick. But I thought it'd be interesting to, can you see this, Todd?
Yeah, it looks good.
This is unemployment by percentage, and I like how they did it. They show it by color, by state, because a lot of us are blindsided by the state we live in. And you and I are in Utah, and when people are like, "Oh, things are so hard, unemployment's hit," it's like I look around in Utah, and it's like I don't get it. I don't understand what you guys are even talking about.
Yeah.
And you can see why. Look at Utah on this map. I mean, we are killing it, along with Florida. You see some of the higher states, obviously less dense. I would say you can kind of see that there's less unemployment in these less populated states. Nevada is, I mean, clearly people are not going to Vegas. Clearly the resorts are cutting back because, when you got extra money, you're going to Vegas, but when you don't, you're pulling back. So clearly Vegas is hurting. And there's something about this that smells a lot like 2008. I remember the housing crisis in 2008. The place that got hit the most was Nevada. I remember you could buy condos for $15,000, $20,000 after the market crash. And it makes me wonder, is this a sign of what's leading? Nevada did lead, Arizona did lead when there was a housing crisis. Are they going to be the leaders also in unemployment? I don't know.
Well, one that surprises me is Texas, but then a lot of people have moved to Texas too. So that might have something to do with it. When your population has a spike, or it's going up really, really quickly, that's going to affect your unemployment rate.
Well, maybe look at Florida.
Yeah.
Florida has had, and Utah. Utah's had insane implants. Like our growth.
Yeah,
here.
well, that's actually a good point. Utah is growing, and I wish it wouldn't. I wish it would stay small. And yet a lot of tech startups are here now. A lot of technical companies are moving from the coasts and coming to Utah. So they're bringing their jobs with them. I think it's the reason. So you got California, the handle on the doors is hot. Everybody's leaving the room,
Right.
and they're taking their businesses with them. A ton of very big businesses went to Texas as well recently.
Yeah, and it's young. It's typically young families I'm seeing. I actually think I saw a study that showed who is moving out of some of these higher dense states or really overpopulated cities. And I'm seeing that it's actually skewed to the younger. It's us young bucks that are leaving, and probably it's because it's easier. You old geezers.
Oh yeah, whatever.
You guys have your roots planted all deep, and so it's hard for you to get out.
Well, yeah, that may be true. But I also heard that a lot of, and this may be a Utah thing, but a lot of employers are hiring older workers
Yeah.
because they're not getting performance out of you young bucks.
No, well, okay. Yeah. I
It's
get that.
true.
I get that.
You're older than a young buck. I mean, I'm talking about, kids that are 20 to 30 that are still trying to figure out what they want to do when they grow up.
Yeah.
A lot of employers are having problems with that age group.
Right. I had a friend, so I was at a city club yesterday in downtown Salt Lake, and I had a friend, we were talking about unemployment, and I was like, yeah, it's crazy. Like, companies are hiring at high levels. And he's like, whoa, pause. He's like, actually, these tech companies are scouting employment. They're actually not hiring. And I was like, wait, what are you talking about? He's like, oh yeah, I have a bunch of friends who are actually doing it, where they're putting out resumes to find talent, but they're actually, at the end of the day, they're doing interviews, they're meeting with them, they're paying the money for the ads, but at the end of the day, they're not even hiring. They're doing it. He said there's two reasons they're doing it. One is to have the appearance that they're okay and the appearance that things are good. And secondly, they want to have the names of the people that are good if for some reason inflation comes down really fast and the market kicks back up and their stocks rise again. Now they've got buying power, and they want to be the first ones in line to get the talent, I guess. So it was an interesting insight that companies are acting like they're hiring, but they're actually not hiring at all.
Wow.
And I don't have internal evidence of that. We're not doing that with any of the companies that I'm a part of. But I think it's interesting that that's happening on a larger scale.
Yeah.
Here's another fun chart. I want to show you this and get your feedback on this. What do you see similar on the maps? This was the 2020s election
All right.
data.
Blue states and red states.
Yeah, even you can have whatever political affiliation you like, and you just can't avoid this. Like, you just can't avoid the correlations here.
Yeah.
Until blue states start getting their economics right, I think you're going to see a mass exodus of people leaving those states. I think you're going to see higher unemployment in those states. They're going to be the first ones to tip over.
Yeah.
And this is evidence to me that there's a direct correlation between politics and how well the state's doing fiscally.
Yeah.
And it doesn't mean that you have some belief around, like, there's 1,000 different reasons you have a political affiliation, but I think there is a strong correlation between fiscal, like what fiscally matters, and your political affiliation. It's like all the older folks who have money, who have generated some level of wealth, tend to be older, maybe more conservative is typically what we see. It's not highly skewed that way, but it does lean that way, generally speaking. Business owners, things like that.
Yeah.
And I think when you see that in a state, the state's fiscally more solvent. In fact, last night I was in an event where I was with our Utah State Treasurer, Marlo Oaks. And this is the first year that Utah has given a tax break to the citizens of Utah.
Yeah, I heard about that.
And it's like, who else out of all 50 states, who else did that? Who else lowered taxes this year? And with inflation and solving our debt crisis, the feds, there's no way they're going to be able to do that. We're already hearing from the administration that, like, all we're going to see is tax increases. And, oh yeah, it's only going to be on the rich, right? But we all know that the tax loopholes for the rich, like, nothing's going to change.
Yeah.
They're not going to be this mega tax for the rich and that they're going to pay.
Yeah. So did you hear about I guess it was I don't have all the details, but the Chicago Pension Fund.
Oh yeah.
And I've heard a couple other sources talk about this. They've only funded 25% of it. And the other 75, 80% of it is all coming on the backs of the existing workers.
Gosh.
So 80% of the pensions being paid right now in Chicago.
So do you think that plays into the unemployment? Like people are like, well, I can't even get my pension. Or I'm worried that my pension's even going to be, so I'm going to keep my job just in case.
Yeah, well, I don't know. I mean, listen, if you don't think it's going to be there, you're going to move. You're going to take another job somewhere else. But I think the policies of any listen, you can't. It's just math. You can't spend more than you earn.
Yeah.
And so Chicago has been doing it for so long that these unfunded pensions. It's just what's happening in Chicago is a micro of what's happening with the U.S. government and Social Security.
Yeah.
Because they say by 2035, it's the Treasury is going to be empty for Social Security.
Right.
And then it's just strictly existing young workers who are providing the benefits to the old retired people.
Well, and that's a huge problem with money supply, because in order to get inflation down, we have to start burning cash, right? And if you look at I don't have it in front of us, but if you look at a money supply chart, money supply went through the roof during COVID, right? We printed trillions of dollars. And then towards the last quarter, we actually started burning it off. You can actually see a decline in money supply. Well, guess what happened? The banks started failing. We had to back all these banks that had these long-term bonds and treasury notes, and money supply went right back up to its old level. Well, what's going to happen when we have to backstop pensions, when we have to backstop Social Security? Money supply is going to go through the roof again. And I just don't see how we're going to avoid another large increase in inflation having to backstop this. It's not a matter of if, in my opinion.
We have a domino effect. We have a problem. We have a problem if we want to continue to inflate our way out of debt. The government's been doing it for decades, but the way money is created, in case some people may not know, is that when the Federal Reserve wants to flood America with money, they have to work with the U.S. government to create debt. And so when a treasury bill is issued to the market, or a T-bill, that's a government debt, right? They're asking for money. They're asking for a loan. So somebody's got to buy that loan. Somebody's got to buy that debt and loan the money effectively. Right. Well, what happens if countries around the world no longer want to buy treasuries and fund our debt? Well, the Fed has to step in, and the Fed has to increase its balance sheet of treasuries in order to insert money into the economy. Well, where does that money come from? Does the Fed have a big vault of money that it's already got? Well, sometimes, but most of the time, this money's created out of thin air. It's the Fed buys the debt and just goes over to their computer and adds the money to the federal government's checking account. And now the federal government, they have the money, it came from nowhere, and now you've just watered down the Kool-Aid, right? You're just putting more money into the economy than existed before. And so the problem is, what happens if the Fed is the only buyer of treasuries? What if the Fed is the only buyer of government debt? We've got a major problem if that happens.
Yeah.
It can't go on forever.
Yeah, it's a simple supply and demand.
You don't want to know what I think.
Well,
I think the U.S. government is going to have to file bankruptcy, just like it did in 1971 when it took us off the gold standard. And Nixon said, "Sorry, you can't get gold for your dollars anymore." Well, I think it's going to happen again. I think.
How do you do that? How do you
file bankruptcy with your treasury? You say we're filing bankruptcy.
How?
These treasuries you have are no good. We're going to do a reset.
You just say, sorry, reset.
Yeah. It's just going to be a reset.
Well, I think this is a good transition. So next topic's on Bitcoin, or you could say the broader market of cryptocurrency. I heard this last week, Warren Buffett's come out with a lot of things, and I'm trying to decide if this is a play that he's being, like, the news is calling him in from the powers that are greater than we understand to kind of tame the markets. So they brought his voice. I'm trying to understand it. They bring his voice in to help tame the markets, or is this truly Warren Buffett's belief? So I don't have an answer for you guys on this, but here's what Warren Buffett said. He said this week, Bitcoin is a gambling token. He said those words, gambling token. And he said that, he understands that people are interested in it and that they're wanting, this is how he said it, that they're wanting to play the roulette wheel. So he's comparing Bitcoin to gambling and roulette. And that the reason people are so excited is because of the potential upside, the potential, moonshot gains. But at the end of the day, I think what he's saying, and I think he even used these words, is there's no intrinsic value. What are your thoughts on that, Todd?
Well, we got to define intrinsic value, right?
Well, according to Buffett, what's intrinsic value to Buffett? I think that's probably a good place to start.
Well, yeah, I've read all of his books, value investing.
Right.
I was a Buffett, what do you call that? I was in his fan club.
Yeah.
I've been a fan of Warren Buffett for over 20 years. But
yeah, I've learned
so
a ton from the guy.
Intrinsic value is when you're talking about money, okay, intrinsic value means, or if you're talking about a business, is, what's its book value, right? What's this business worth if you took all the fanfare away and you had to sell all the assets? What would that be worth? Well, the book value of a business is basically everything that it owns minus its debts, right?
Right.
So that's intrinsic value. But when you have a dollar and its intrinsic value is the fact that it's accepted by everybody in the world, right?
Right.
As a medium of exchange. But even that doesn't, the piece of paper doesn't buy you much when it boils down to it, because it's no longer backed by gold. But from Buffett's standpoint, the fact that it is a medium of exchange that the world accepts carries a lot of intrinsic value. Whereas Bitcoin is, it's not centrally managed by a government. It's kind of loosey-goosey. It's very volatile. It's jumping up and down. How high did it get? It's up 80% this year.
Yeah, it's
last year it dropped,
now.
It skyrocketed to what? I don't know, 80,000 or something, and then dropped back down to 20 within like a month.
It hit lows, it hit like near the 15s, and now it's back up into the 30s.
Yeah. So
I think a lot of people are really excited, but
yeah,
at the end of the day, is there a P/E ratio for Bitcoin? Is there do you get dividends on your Bitcoin?
No,
I think that's why Buffett has never jumped in, at least that we know, right? He's never bought.
That we know. That's a funny visual.
Yeah.
So, and what I actually listened to that CNBC interview.
Oh, you did?
Yeah, I did. I listened to it. What I found funny about it was he was talking about stuff I remember, like chain letters. I remember, if you don't know what a chain letter is, Matt, I know you were still in your dad's eye.
That was before my time, God.
But yeah, let this old boy teach you a few things. So in the good old days, when everything was done by the U.S. mail, right? They had they had this scam called a chain letter. And so what you would do is you would write to like 10 friends and say, send me $5. And then each of you send your friends 10 letters and ask them to send you $5. And people did this. And if you were the one that started this chain letter,
you made a fortune.
You made bucks.
It's like
the poor soul at the end of it. Yeah. So anyway, he just cracks me up. And then so he bashes on gambling, and he says, but actually, if I own the roulette wheel, that wouldn't be so bad, because he's thinking business all the time.
Right.
And
yeah, so the people who are really making money are the transactionals. It's the brokers, it's the people transacting Bitcoin, it's the people.
Well, that's true of any market.
I think there's value in that for sure.
Yeah, that's true of any market. The financial markets have always made money on transactions, and maybe that's the fact that this sprung up from an IT person that nobody even knows. You know, Bitcoin's created by somebody that nobody's ever met. And that it wasn't, as far as we know, it's not somebody in the financial industry. That really bothers them, that they have lost control of that.
Right.
I mean, frankly, anything that whenever you compare two assets, that's how you find value. So the fact that people are willing to pay $30,000 for a Bitcoin says that it's got value, right? It's got value.
Maybe not intrinsic value, but some type of value.
But it's got perceived value.
For sure.
And the problem is where's the floor on that perceived value? You know, when the escape doors, when the exit doors fly open and everybody's trying to get out at the same time. You know, Warren Buffett says when more people start selling than buying, where's the bottom? There's no intrinsic value to stop it.
Right.
So if you, and this gets me back to the gold, I'm a gold bug if you haven't figured that out. So when dollars were backed by gold, you always had intrinsic value. In fact, I should have pulled this out of my safe. I've got a $20 bill from 1929. I'll bring that next time.
Okay.
But it says something on the bill that you don't see on Federal Reserve notes anymore. And that is that you can take this bill into any Federal Reserve Bank and we will give you an ounce of gold. So the paper was worth something.
Yeah.
It had intrinsic value. It had a bottom value.
Right.
I'll think when everybody's running out the door, it's still got value.
Right. And yeah, that's a good point. It's like with most crypto, and tokens can be a little different, but with most cryptos that are currency and currency only, like Bitcoin, what is the intrinsic value? Bitcoin doesn't even have a chain that people are building stuff on. Ethereum's different. And my Bitcoin friends would, especially the whales, would probably argue against me on this, but the reality is Bitcoin doesn't have a network that it's built on. It has no like industry or thing that it's built itself on top of that. You could say, here's the base layer of value, because there isn't one. I mean, there is talks, by the way, of building a network on Bitcoin. There are people talking about making it possible to put NFTs on Bitcoin and build things out on the Bitcoin network. But the truth of the matter is it's so old and it's so slow. I don't know why you would want to do that. Yeah, and so bull or bearish, what are you thinking? You think this thing's got more room to climb? I mean, it's over doubled its value since it's low.
Yeah, so when people don't trust the dollar, they transfer to other assets, right?
Right.
The same thing's happening to gold and silver right now. They're going through the roof.
Right.
And so Bitcoin's following gold and silver. I don't know. I think when things get really bad, I think people are going to dump their Bitcoin and go to metals.
Yeah, I agree.
And commodities and food, things that actually have intrinsic value. So for the time being, I'm bullish.
Yeah.
For Bitcoin, but I don't think it has a very long lifespan.
Yeah, I agree. I think I'm a 2/4 bullish on Bitcoin until we see. It's got to be like blood in the streets news, and then it doesn't matter what it is. Anything that people have speculative investments in, they're going to pull from to feed their families, to pay their mortgages. And I don't care if you're HODL last resort, that's the last resort, right? And then you start pulling out.
If you hold all the gold in the world and you don't have any food,
right,
you're not very rich.
Yeah, right. Okay, good. I think this is a good transition because we're going into announcements next. And I think there's a direct correlation with the main announcements that came out this week. And one of them is CPI. I actually have an image I can bring up on CPI announcements because I think from my perspective and my view, CPI was the largest announcement that came out this week. I don't know what your thoughts are on this, but can you see this, Todd? Here's our
producer price index and CPI.
Yep. And CPI, a lot of people said CPI was pretty neutral this week, but it actually wasn't. This is the first line. So you've got, the times that they came out. This was April 12th that the CPI came out. The first line is the actual. And this was where the forecasts were, and this was the previous, was the last line. But you can actually see the actuals for consumer price index overall. Actual dropped 0.1%, which is not great. So consumer price index actually went down. Let's see. If you look at CPI year over year, it went down 0.1% also. So yeah, you can see the difference here. So, but for the most part, the forecasters were spot on. And so the market didn't really move on this news. I didn't see the market really move on it because it wasn't, the forecasters pretty much nailed it. They nailed like, this is what it's going to be. And it's exactly how it came out. What are your thoughts on that?
Well, I mean, I don't know if you've looked at the PPI, the producer price index, but this morning the producer price index looks like it. Let's see, core retail sales, the producer price index.
I just don't think there were any surprises this week with CPI or PPI. It was pretty much in the boundaries of what the forecast was going to be. And just so you guys know, for new traders or people who are looking to game the market or understand how this works, it took me a while, actually. It took me, when I was really new, my first year in trading, it probably took me 3 to 6 months to understand this like forecasting thing. But here's what it is, guys. It's not when the announcement comes out, if the number is less or more than the previous, the market's going to move. Everything's already priced in. These forecasters, there's these geniuses, globally that are putting in their information. Banks, hedge funds, analysts all across the world are putting in their idea based on the data they have of what they think the new announcement will be before it even happens. And so it's already priced in. They're already putting in their trades days before the announcement comes in, right? To make money because they've got it way before you've got the data. But what happens is when the forecast is wrong, when these forecasters are off and the data comes in way above or way below that, we see the market move. And this week, I just didn't see that with CPI. And like you were saying today with PPI, I just didn't see that.
Yeah, one comment I would make about these numbers that come out, these government economic numbers that come out, when they interview the economists, that when an economist is asked to give their prediction, and depending on which announcement it is, the pool of economists that they interview goes up and down. But if you're an economist and you want to keep your job, let's say you do your analysis and you are
way off.
Everybody's at 0.4 or 0.5, and your analysis is 0.7. Are you going to really submit that?
Yeah,
because you're taking a big risk on your whole career could be blown just because you gave one thing that was way off, and you could have been and everybody was right. Yeah, but if you're right and everybody else is wrong, then you can make a better career for yourself. And so what most of them do is they water down their predictions and they try to stay in lockstep with what everybody else is doing. These predictions aren't very accurate.
Yeah,
I think that's why you also don't see. And thank heaven for day traders, right?
Right.
If it wasn't for crappy economists, predicting these so crappy, we wouldn't have trading opportunities like we do.
Yeah, that's well said, though. It's like it's not socially acceptable to be right if it's way off. But if it is, you're right about it, then it's a huge win and you get highlighted and people bring you on the news. But I think that's actually the problem with these forecasters is, well, really the news in general. The news we get, like when, Bloomberg or CNN Money or any of these guys are interviewing people, they're not interviewing these forecasters. They're interviewing the people that aren't going to lose their jobs over making a prediction.
Yeah.
And they'll be 50% wrong, but the 50% of the time they're right is the things they remember. And so they bring them on like, oh, you were right about this crash back. And it's like, well, yeah, but you were also wrong about half of your predictions.
Yeah.
It's like who's that philosopher that everyone always quotes, but like half of his prophecies were like completely bogus. It's like it's just like that, right? So
Nostradamus?
what's that?
Was that Nostradamus or somebody like that?
No, it's like one of those common quote philosophers that we hear. It'll come to me. One of the things, I don't know how much else you have on announcements, but one of the things that I wanted to talk about that I thought was a huge announcement this week, and I happen to be in some trades that this obviously impacts, is all the bank revenue came out this week. And I was shocked. In fact, let me pull up the calendar for that, because I think this is important data. Let's see if I can find it here. I think I've got an image here somewhere. Yes, here it is. You guys are going to love this. Here is this week's data on bank announcements. So First Republic was on Wednesday. Delta Airlines, not so interested. I don't know how that got in there. But BlackRock, Citigroup, JP Morgan, United, and Wells Fargo all came out today. All of them.
Their quarterly reports?
Yep. So
Okay.
Quarterly financial. And guess what happened? JP Morgan Chase came out today and had insane earnings. Like insane.
Really?
Like their prediction, their forecast compared to where they actually came out was an insane gap. And so naturally, they had to look it up sometime. Look up JPM sometime. I think it's up like 8% or 7.5% right now. And today, just today. And so obviously everyone's going, what the heck's going on? We have all these bank failings and JP Morgan Chase is raking in the money this quarter. What's going on? And so obviously Jamie Dimon got called out, and he wanted to make sure that this didn't put him under scrutiny. So he came out with a statement today that basically said, hey, we just want you to know that all of our revenues have nothing to do with these small banks failing. Nothing to do with people pulling their deposits and putting billions of dollars into our big bank. It has nothing to do with that.
Their stock price looks like a hockey stick. You need to show that.
Yeah.
It's up 11% in the past 5 days.
Wow. Yeah, look just at today. I think today.
I'm sorry, 9.15% in the last 5 days.
Yeah. Yeah. So
just today it's up 7%.
Gosh, 7%. Yeah. So clearly, are the big banks winning from this crisis? I think so far I would say yes. But I think there's some big plays. We saw some smaller banks. Obviously, Silicon Valley Bank was one of them. But some of these other banks that are showing some major weakness right now. And weakness means people, even though the government and Warren Buffett, we talked about this on Wednesday, Warren Buffett said, depositors have nothing to worry about. The government came out, US Treasury treasurer came out and said, we're going to backstop all deposits. No one needs to worry about losing any money in their deposits. So like depositors don't need to pull their money out, right? But they are, because if you've got a weak bank that's coming out with weak statements, you don't want to deal with 2 days of having your money locked up. You don't want to deal with a week of not being able to pay your employees payroll. And so the natural move is people are pulling their money out of these small banks. They're moving them into the big banks. If you have billions of extra dollars, what are you doing with it? You're making returns, you're making interest. And no wonder banks like JP Morgan Chase are way above what they thought. They're not making smart business decisions. It's the same thing they were doing the quarter before. They just have way more deposits than they had.
Well, it's not, but you got to remember in 2008, the bank bailouts, there's about 6 banks in the United States that are too big to fail. The government actually said, you are too big to fail. So where are people going to go?
Right, into those
Fargo,
banks.
Morgan Stanley, Goldman
Bank
Sachs,
of America,
Citigroup.
Yep.
All the big banks are getting all the money because the government's already said, you're untouchable.
Yeah.
So this is all part of the moral hazard problem we have when the government has too much control over the economy and banking.
Yeah.
So the Federal Reserve was supposed to be an independent entity.
Right.
And it was supposed to operate independent of the government, because you don't want to make decisions based on politics. You want to make decisions based on the economy. And but It's not exactly what we have nowadays, unfortunately.
Yeah, what's the moral hazard? What would you say is the moral hazard?
Well, the moral hazard is you're protecting 6 banks, and they're all and all the men in rose-colored glasses in the boardrooms are going, we're untouchable. Let's take more risks with these deposits. Let's buy Bitcoin.
Right.
I don't know.
Doing.
But the
Or not just
problem is
Bitcoin.
the
You saw
problem
what
is
they're doing with gold, right?
well, they're accumulating gold, but they're not talking about it.
Yeah, I wish I could find that.
But the problem is the moral hazard in this is if you know that you can't fail, how is that going to govern your ethics? How is that going to govern how you look after the deposits that are coming in? If you're like, well, yeah, if the government's just going to, I think the biggest worry we have is that all of our people, we're going to get a bad name because all of our people are going to lose their money. But, I'm the bank president. I don't own the bank, but I run the bank, and I make my money on how quickly I can earn revenue over the next quarter. I'm going to make crazy decisions. I'm going to gamble to get as much money coming my way as possible. And, I can throw caution to the wind because I don't actually own the bank. So anyway, I don't know.
No, I think, no, this is valuable. And I showed you this. Excuse me. I showed you this, I think, earlier this week. I want to show our audience this. These are the type of things that banks are doing right now because they're completely backstopped. They've got no risk. They have no reason to take less risk. Let's see if I can get this up. Safari. It just looks white. You guys see this? It just looks white. But anyways, if you look it up, banks have been stockpiling gold this year. Stockpiling. It's like
you told me they've doubled it, right?
It's almost 2 times what it was last year.
Okay.
2 times. And so when we talk about gold, I think we were talking about this earlier, like why are gold prices going up? I think you got to look at who are the big buyers, and it's banks. It's banks and countries. Everyone's trying to they're trying to backstop their currency. We know China's been stockpiling gold also for a while. But the fact that banks are doing this means they're bullish. Banks are bullish on here it is right here. I've got it. Banks, I think, are bullish on gold right now. I think it's a very clear sign that if banks are doing this, the guys that are worried about their mortgages, worried about something happening inside of maybe their loans, but looking for a good investment. Look at this. Q3 2022 gold. So this is gold net purchases by central banks. And this was 2022. I don't have Q4 and this year, but my guess would be is it's as high, if not higher, in tons of gold that have been bought in the last 2 quarters.
Wow.
And so is gold, am I bull or bearish on gold? I would say bullish for sure, even though we are at all-time highs, because you just can't not be bullish as the dollar devalues. It's like the value of gold hasn't changed. The value of how much gold buys a house hasn't really changed. It's just the value of the dollar has dropped. And so I think banks are hedging their bets right now on gold. And it'd be interesting to see who's doing it the most. Is it big banks or is it small banks?
Yeah. Well, these are central banks. So
right.
These are central banks of different countries is what you're looking at here.
Right.
So banks around the world, central banks around the world, primarily your BRICS nations, Brazil, Russia, India, China, and Singapore. I believe the S is Singapore. all those emerging economies are all buying tons of gold. That's where most of your gold's being purchased by central banks right now.
Interesting.
And that's in preparation for the reset of the dollar, in my opinion. And that's another discussion for another day.
Because they're pegged to the dollar. And so
China yuan is. So, but that doesn't, you better believe it, when they're ready, they're going to disconnect that peg.
Yeah, interesting. Okay, well, I think this is a good time to transition to probably one of our more controversial topics that I picked. This Bud Light controversy. I mean, I know it's the ugly topic in the room that no one wants to talk about, but you just have to talk about it because there are fiscal consequences to these type of marketing ploys, and it happened. And I'm trying to even get my head on straight on it. It's like, is this a bullish move or a bearish move? Is this one of those tactics that you throw something out there that's so obscure and so controversial that now all we're talking about, like even now, we're talking about Bud Light. We are free marketing for Bud Light in a way. And a lot of people are making that argument that like this is free marketing for Bud Light. Long term, this is going to be a great play. I'm totally bullish. We think the market's going to go up. But then you have the alternative that's like, but you also have a bunch of people that are canceling it. And the marketing around it is also bringing more awareness to the people who drink Bud Light. And is their target market really going to stop drinking this in the first place? And
what happened?
Here's my disclosure.
You're losing me because can you explain what happened? I don't follow beer trends.
Yeah, well, I'll throw this disclosure out. Here's my financial disclosure around Bud Light. I don't drink beer. So I really don't have a bone in the thing, right? I really don't go to bars. I really don't drink. And if I did, it's like I don't even know what to pick. It's just not something I do, right? I don't really drink beer. But here's what happened. So Bud Light had here, I'm going to say it the way that I think it should be talked about. Bud Light has hundreds of spokespeople, hundreds. And they have a hierarchy tier of marketing. They have high executives, and then they have sub executives that are over like certain areas, demographics, like people that are doing their social media marketing, people are doing billboards, people are doing like events. Like there's all these different types of executives. And then under that, they fund them, right? They fund certain spokespeople. And so there's a certain tier of Budweiser's marketing team that oversees who their spokespeople are going to be. And they have hundreds. Well, they picked one that happened to be transgender. And the world's going crazy about it. One of their hundreds of spokespeople happens to be this transgender person. And the world's going nuts on it, right? And I would say maybe even overreacting on it, but it's really triggered a lot of these, what I would say, right-wing ultra conservatives. It was actually Kid Rock, that did this viral video where he lined up a bunch of Bud Light and shot it with a bunch of guns and then gave the middle finger to the camera and said something provocative like, "I'll never drink you." It's like, okay, well, that was pretty edgy, Kid Rock.
I'm looking at this right now. There's Adam Calhoun did it too. He just watched real quick. He took a shotgun and started blasting these beer cans. What's funny is it looks like they transitioned to a Coors beer can at the end of these little clips they're doing. So I wonder if Coors is behind this.
Yeah, so that is where my mind goes. I want to share some more data because if I'm going to trade Bud, if I'm going to short it, or if I'm going to buy, a lot of people are saying opposite opinions. A lot of people are saying this is a great buy opportunity for Bud because it's already dropped a ton. People are using headlines like I've seen headlines that are $4 billion. I've seen headlines that are $6 billion. And it's really just the day that you did the announcement. But somewhere between $4 and $6 billion came out of Bud Light after this happened. And this controversy happened around like, is this representing our target market, right? So no question, there was a reaction to this. There were certain people that pulled out, but there was a Citi analysis who came out and said that this actually, because you got to get Budweiser is global. It's not just sold to the extreme right conservatives, right, in this country. It's not just for them. In fact, if you look at like politics around this, people who drink Budweiser, it's almost 50-50, like regardless of your political affiliation. So it's not like Budweiser is just for conservatives. Progressives also love the drink. They love the beer. And so it's not really directly correlated that way. But anyways, the city analysis came out and he said that he thinks that only 8% of the group's total revenue is even tied to this group. Only 8%. And so from that perspective, when I hear something like that, I go, this is radically over, like the market is overreacting to what's happening here. Like if this only represents 8% and only 8% of the people even care about this, like the worst you could have in a short period of time is people start drinking it for a week, 2 weeks, whatever, right?
Yeah.
But I would say people are going to forget about this in 2 to 3 weeks. And then you're going to have the market come back. And then you're having all these other people that are saying, well, look at all of the marketing Budweiser is getting because of this. You know, it's just brand attention, right?
Yeah.
It's just brand awareness. And this younger generation, they're not tied. They're not Kid Rocks. They're not these extremists. They're not these conservative extremists. You know, they embrace the transgender community. This is part of their culture of accepting it. And a lot of them, I don't see this being a major, like if someone's drinking some other beer, they're going to be like, oh, well, now I'm going to start drinking Budweiser because of this. I don't see that happening. But I don't think any of them care or are going to cancel, but it does bring the awareness to it.
No,
so I don't know. I'm kind of like up or down. Where is this thing going to go?
No, you're right. I think I see it the same way you do. I'm looking at the Coors Beverage Company stock. It's up 7.6% in the past 5 days.
Interesting.
You know, at the same time that Anheuser-Busch was down. Let's see, they were down. Oh, and that's the thing. They're down from $66 to $64.50 per share in just a few days. So, and it's actually recovering now. Anheuser-Busch is actually on the recovery. Right. So Coors got a little present from that, but honestly, you know, I think the play in this is done. And I think Kid Rock is probably going to go to his woodshed tonight and have and drink a Bud Light. He's you know, this is all fanfare. You know, he's probably going to sneak out to the woodshed when nobody's looking, and he's going to take a 6-pack out there. But anyway,
that's a good point. I mean, because it's his audience, he probably got a ton of attention from this. It was probably like it's fanfare for sure.
Kudos for him.
Yeah, I mean, he definitely cornered his audience on this one. I will share some rumors I've heard, and they're unverified. I looked everywhere to verify them because I'm really interested in this trade. But I saw that some vendors are saying that 30% of actual product, like canned product, has dropped in the last week. Like there's a 30% drop on the like shelves, people not buying it. And from tap bars, they're saying 50%.
Really? Wow.
So I'm kind of weighing this, going, is it?
It might have a second surge, but right now it's not really affecting it.
Yeah. Do you know what this reminds me of though? Back in 2019, Gillette did something really similar that had the same impact, right? Again, I don't care. One, I'm not a beer drinker, and two, I'm not anti-trans, so it just doesn't matter to me. But I am interested in the market impact because certain people are, you know, really extreme on both sides, and so it affects the market. But I remember when Gillette did something like this, where they had, you know, they were, again, it's not their main focus. It was not their main ad that they ran, but they were running something to say, look, if you are trans, like Gillette's your brand. And people went crazy. Like they were canceling their razor blade subscriptions, and they were, you know, buying these all, and there are new brands coming out with new razors. And so I pulled up a Gillette chart to see what was going on and how long it took for that to catch up to them. And it was about 2 to 3 months.
Wow.
So I don't know if we know yet. That's
so
what
about a 3-month window to see how distribution is affected.
Right. And I don't know Beer might be different. It might be harder to enter the beer market because there's lots of regulation to create a new line of beer. You got like Utah, it's next near impossible to make alcohol in this state. So, but a razor, you could, call your vendors in China and have a new razor line within a week, maybe 2 weeks if you really pushed. And so you could grab that market that's like really anti something and make a product. Where with beer, no one's going to come out. Coors is not going to come out and say, hey, we're anti-trans. Like, no, they're not going to do that. And you're not going to have a beer. I mean, I have seen some really small companies that are like making this like their mark, like, hey, if you're a real man, and it's like, come on, guys. But I just don't think the market exists. I don't think there's an alternative that's going to just pop up out of nowhere that's going to steal these clients as the alternative beer for Bud Light. So there is a difference between razors and beer. I think that we need to make clear. But there was, Gillette suffered massively from that ad. I mean,
I think it's possible that the Coors might gain customers from this. I don't think a new beer brand is going to spring up because of this. I think people might, from peer pressure, maybe they're in a conservative group of friends. Maybe because of peer pressure on a short-term basis, there may be a spike or a drop in Bud Light purchases, but I don't think this is a long-term thing. I mean, for something like this to be long-term, there has to be something wrong with the product. There has to be something wrong with the price or the product. People that are drinking Bud Light have been drinking it, for a long time. I don't think something like this is going to scare them away long term.
Yeah.
Anyway.
Right. Yeah, I tend to agree with that. Well, we'll see. This is a fun. We had a couple predictions today that I think will be fun to see how it rolls out. I want to make some notes so I can call you out on your bad predictions, Todd.
Oh, my dollar predictions. Yeah, well, I know who's going
to. The 10% when you're wrong, I'm going to make sure everybody knows.
Yeah, I'll be right, but we may not be alive when it happens.
Yeah, right. Well, we had, just to sum it up, guys, because we're coming up to the end of our hour here. We had some fun predictions, some fun analysis over jobs, the cryptocurrency market, major announcements this week, and also this kind of controversial topic of Bud Light this week. I think both of us kind of agreed that we think short-term Bitcoin probably has some room to run up, a little bullish on that, probably bullish on the crypto markets in general. But like you said, Todd, I would agree with you that when things start getting really bad, people are going to pull out. In fact, I think they're going to pull out of highly speculative investments sooner than they do like companies and actual stocks that have intrinsic value, have a base, because people got to eat. People need sugar, people need coffee, right?
Yeah.
And as far as the banks go, I think Jamie Dimon's full of crap. I think they made a ton of money. I think these big banks are making a ton of money on this play. Unfortunately, one of the things I'm worried about is that they'll game it, that they're going to continue to game squeezing small banks. And we might see some things that come out to put pressure, even more pressure on small banks, because after seeing something like what happened this Friday, what happened today, there's an incentive to make small banks look like the bad guys to these big banks. Billions of dollars incentives, right? And so I think the bank failures are not over, and even worse, the big banks are now incentivized. They're seeing the carrot to make small banks look awful.
Yeah.
And so and who wouldn't, especially when you can buy their assets for 10 cents on the dollar once they fail? Like, who wouldn't want to do that? So yeah, that's all I have for today. Anything you want to say to wrap things up, Todd?
No, just, thanks everyone for being here. Happy Friday, and have a great weekend.
Yeah, thanks, Todd. Thanks for being on with us.
Thanks, Matt.
Yep, see you.
Bye-bye.